China's economy is at a crossroads. The country is undergoing significant shifts marked by ambitious government initiatives. One of the most noteworthy is the recent 6 trillion yuan bailout plan. This plan aims to address debt concerns and provide a much-needed boost to the economy. Alongside this, the introduction of consumption vouchers signals a strong push to stimulate domestic spending. These initiatives highlight China's commitment to fostering sustainable growth in the years to come. As we look ahead to the next 5 years, understanding these initiatives and their potential impact is crucial for investors seeking opportunities in the world's second-largest economy. The global landscape is watching closely as China navigates these changes and charts a course for its economic future. China's 6 trillion yuan bailout plan is a significant intervention in the country's financial system. This plan primarily targets local government debt, a long-standing concern for policymakers. By offering to swap high-cost debt with lower-cost options, the government aims to alleviate financial pressure on local authorities. This move is expected to free up resources for local governments to invest in essential services and infrastructure projects. The bailout plan is part of a broader effort to mitigate risks within the financial system and create a more stable foundation for economic growth. While the immediate impact of the bailout will unfold over time, it underscores the government's commitment to maintaining financial stability. Despite global economic headwinds, China's economy has shown resilience. Recent data suggests that the country is on track to achieve its growth targets. The first half of 2024 saw a GDP growth rate of 5%, a positive sign for the overall health of the economy. Inflation, a key concern for policymakers worldwide, has remained relatively subdued in China. The International Monetary Fund projects China's GDP growth to reach 4.8% in 2024, driven by a combination of policy support, investment, and a gradual recovery in consumer spending. These figures indicate a positive trajectory for the Chinese economy, albeit with potential challenges on the horizon. China's economic future is increasingly intertwined with the spending habits of its vast consumer base. As incomes rise and the middle class expands, consumer spending is emerging as a pivotal driver of economic growth. The government's introduction of consumption vouchers is a strategic move to further fuel this engine of growth. These vouchers, designed to encourage spending on a range of goods and services, are expected to provide a direct boost to various sectors, from retail and dining to entertainment and travel. The success of this initiative will be crucial in shaping the overall trajectory of China's economic recovery. Section 5: Infrastructure and Real Estate Building Blocks for Growth. Infrastructure development and real estate have long been pillars of China's economic growth model. The recent bailout plan and ongoing government support are expected to drive further investment in these sectors. Infrastructure projects, particularly those focused on transportation, logistics, and urban development, are likely to witness increased funding and attention. In the real estate market, the focus is shifting towards affordable housing and urban renewal projects. These areas align with the government's objectives of addressing housing affordability concerns and improving the quality of life in cities. Investors looking for opportunities in these sectors should focus on companies with strong track records and alignment with government priorities. Section 6: Advanced Manufacturing Gearing Up for Technological Advancement. China is actively pursuing its ambition to become a global leader in technology and innovation. This ambition is translating into significant investment and policy support for advanced manufacturing sectors. Industries at the forefront of this technological push, such as semiconductors, robotics, and renewable energy, are attracting considerable attention from both domestic and international investors. The government's Made in China 2025 initiative outlines a clear roadmap for achieving dominance in these key industries. As China seeks to move up the value chain and reduce its reliance on foreign technology, opportunities abound for companies operating in these strategically important sectors. Section 7: Consumer Goods and Services, Riding the Wave of Rising Spending. The anticipated growth in consumer spending in China presents a wealth of opportunities for businesses in the consumer goods and services sectors. As disposable incomes rise, Chinese consumers are increasingly seeking out higher quality goods and experiences. This trend is particularly noticeable in areas such as e-commerce, entertainment, healthcare, and travel. Companies that can tap into the evolving preferences of Chinese consumers, offering innovative products and services tailored to their needs and aspirations, are well positioned to thrive in this dynamic market. Understanding the nuances of the Chinese consumer market will be vital for businesses seeking to capitalize on this growth. Section 8. Seizing the future investment opportunities in China. China's economic landscape is undergoing a period of significant transformation, presenting both challenges and opportunities for investors. While uncertainties remain, the country's long-term growth prospects remain intact. The government's commitment to driving innovation, boosting domestic consumption, and pursuing sustainable development creates a compelling case for investment. Investors seeking exposure to China's growth story should carefully consider the sectors and trends shaping the country's economic future. A deep understanding of the regulatory environment, market dynamics, and consumer behavior will be essential for navigating this complex and rapidly evolving market.